Welcome to ForexTV.com. Today is Monday, November 10th. I'm Kathleen Reddington with your New York Forex Market Buzz. Taking a look at the latest headlines from the CEP News Desk, the U.S. Treasury has revised its loan agreement with AIG. It has adjusted the terms of the loan to function under the Troubled Asset Relief Program. According to the new terms, the Fed is loaning the firm $60 billion rather than the original $85 billion. The Treasury Department will purchase $40 billion in the firm's shares under the TARP program. Investor confidence in the Eurozone continued its decline in November. The Centix investment indicator fell to negative 36.4 for the month, down from both the negative 33 reading expected and October's negative 27.8 level. The UK input producer price inflation came in at 13.8% year over year in October, down from both the 18% rate expected and September's 24% rate. And Canada's new housing price index increased ahead of economists' expectations for September. The index had a 0.1% rise month over month for a reading of 158.7. However, on a year-over-year basis, the index advanced at its slowest pace since March of 2000. Today we are joined by Dustin Reid of ABN Amro. Hi Dustin, how are you today?
Hi, good morning, how are you?
The yen fell against the euro as there is speculation China's massive stimulus package will lead investors to higher yielding currencies. Do you agree with this, and what's your strategy going forward for the yen?
Well, I think what's been happening is that we've had the Chinese fiscal package come out overnight, and what that has essentially done is given a little bit of risk appetite back into markets, and we saw Asian equities as well as European equities rally on the back of that. There's been a very, very strong correlation between equities, which I'm using as a proxy for overall market risk sentiment, as well as against the dollar, I should say. And when we see equities bid, it usually means that the dollar is going to be offered. And when we see equities offered, it usually means the dollar's bid. So the Chinese package coming in, getting equities bid, got the U.S. dollar offered overnight against most of the major currencies. And then when people were taking risk off the table, they usually take it off via yen as well. So I continue to expect that yen's going to be a function of risk sentiment in the days and weeks ahead, possibly even months. I think that theme of kind of trading dollars or yen versus equities and overall risk sentiment is likely to continue for the next little while. And I'm personally not a huge believer that we're going to see a sustained equity rally through the end of the year. So I'm kind of a buyer on dips of yen where possible. So I'd be a seller of dollar yen where possible, as well as euro yen.
All right, now you touched on it a little bit. The U.S. dollar opened mixed today, and we saw a boom in the equities market this morning, but it seems to have fallen off some by now. How do you think this is going to affect the U.S. dollar overall and the equities?
I think that relationship I was just speaking about before is likely to continue to hold. I think, and it's a bit curious, a negative U.S. stock market can equal a stronger U.S. dollar, and that doesn't necessarily click, at first blush, and understandably so. But it's really all about people looking for safe haven assets, people looking for safe haven currencies, places to park their money in times of significant financial turmoil. So I continue to think that if we see a sell-off this week in equities, that the dollar should generally be bid against most G10 currencies, probably with the exception of yen, which would likely be the outperformer within the G10 space.
All right, and the British pound has made some big advances after losing a lot recently. Is this going to push the sterling in the right direction, or will this high yield appetite just fizzle out because of the UK's economic issues?
Yeah, I think more the latter. I think the high yield appetite will fizz out due to the economic issues. I'm a buyer of the euro sterling cross. I still like buying euros over sterling with respect to cable or sterling against the dollar. I still think sterling dollar or cable lower is probably the way to go over the next month or two. I still think that there will be lack of demand for the high yielders as markets cut rates, and as the UK economic situation looks bad, and as the housing situation in the UK continues to deteriorate quite significantly. So I think that there will be further downside risk to the sterling outlook in the months ahead.
All right, and the CAD was down this morning despite higher oil futures on the overnight, but then oil was down and then oil was holding steady. Will we only see the Canadian dollar push down lower, or do you see a bottom for it?
I think we may have hit a short-term bottom around 115, and I wouldn't be surprised if we kind of traded in this new 115, 125 big figure range for the next little while. I think CAD's very much a similar story, and a good proxy for going back to the risk overall theme. I think when you have people that have risk appetite, you're going to see the Canadian dollar trade higher or dollar Canada lower, and when you have equities rallying, you'll see the Canadian dollar bid. Canadian dollar bid and dollar Canada lower. So I think that there is still some play left with the commodity price correlation, but that correlation, according to my charts, has been falling off a little bit. It's not bad to play commodities with the Canadian dollar with respect to oil, but I wouldn't necessarily use that as the first variable on an intraday basis. I still like trading dollar CAD as more proxy of overall risk in equities versus oil prices.
All right, Dustin, thanks for being on the show today.
Thank you very much. This
has been your New York Forex Market Buzz with Dustin Reid of ABN Amro. I'm Kathleen Reddington. Join us later this afternoon for PM Exchange right here on ForexTV.com.